Hello YouTube investors, welcome to Simply Investing. My name is Ankit and today I'll be talking about GameStop and the short squeeze surrounding it. I just got home after a long day's worth of work and when I checked the stock market, boom, GameStop performed really well.
And that brings me to GameStop. Check out shares at GameStop surging another 51.
It went up quite a bit and it went down quite a bit. So here I am trying to make a quick video on a late Monday night and I'm hoping that I can present all the facts to you just to convey this idea around short squeeze. Just a disclaimer that I'm no financial advisor. However, based on the fundamentals of investment, I will be providing my personal opinion of where the stock is headed. So let's get started. GameStop, as you know, is a chain where you can buy games, consoles. It's one of these old stores where you can take back your old Xbox and PlayStation games and maybe return 3 or 4 of them for like a $20 to $30 store credit. Well, lately with the malls suffering, GameStop has also been suffering, and GameStop was forced to close down quite a few of its chain stores. And now they're trying to move to the digital market. This is where Ryan Cohen jumps in, and he's the founder of Chewy.com. His company was actually bought by PetSmart for $3.35 billion. In 2020, Ryan decided to take a small stake in GameStop, trying to own as much as 10% of it, and he upped his position to almost 12.5%, making him the largest stakeholder in this company. So where does that leave us? Well, in April, GameStop was trading at a low of $2.80, and last Friday it hit a high of $65, and just today it hit a high of almost $140. Last Friday alone, the stock halted several times. So what happened? Why was there such a sudden rise in the stock price? Well, the reason behind it is because about 138% of the float shares in the market were shorted. And it recently became the most shorted stock in the stock market. So float shares are actually the number of shares that are available in the stock market. If more than 100% of the stock is being shorted, it means that Wall Street is betting against the stock. The Wall Street investors are hoping that the stock will go down and they will cut a profit out of it. By shorting, essentially, the Wall Street investors are borrowing a stock by selling it first and then buying it back at a low price. The price difference equals their profit. So say if they bought a stock at $20 and they sold it at $5, that $15 is actually their profit per share. So these investors think that the company is overvalued and its stock prices are going to drop. So theoretically speaking, shorting a stock has infinite risk because there isn't a limit to how high a stock can go. For instance, one can try to short a stock at $20 and instead of going down, it goes up to $160. That's just a loss of $140 right there. Similarly, the stakes can be much bigger. You can short a stock at $20 and it can go up to $1,000. And now all of a sudden you're at a loss of $980 per share. So now you may be wondering, how can one short more stocks than what's available in the market? As an example, and we're really going to scale it down, if a company has 300 shares available in the market and one hedge fund decides to short about 200 shares, this hedge fund can actually sell their shorted stocks to another company which can once again short these 200 stocks. And now all of a sudden we've shorted 400 stocks and all we had available was 300. So that's almost about 130% right there that's been shorted. And this loop can happen infinite amounts of time where you have shorting and selling, shorting and selling, shorting and selling. And this is exactly what happened with GameStop. For this particular stock, the idea of short squeezing it occurred on Reddit in a subreddit group called Wall Street Bets. And there were 3 key things that made this occur. First, someone increased that there's an increased amount of shorts that are taking place. Second, the idea of being a digitalized store, plus the new Xbox and PlayStation fueling more game sales, caused many investors to be bullish. And third, Ryan Cohen being an investor also added fuel to the bullish drive on the stock. This made it a prime setup for a short squeeze. So with only a finite amount of shares available, regular investors are trying to buy as many shares as possible and they're trying to hold it. It's essentially a clash between Wall Street short sellers and investors like you and I. And this is driving the price up high. The short sellers are actually trying to buy as many shares as possible to cover up their positions. And on the other hand, investors are trying to punish these Wall Street short sellers. There's a user on Reddit named Deep Bleep Value who actually invested $53,000 into option calls, which are now worth $11 million. He's someone who recognized this opportunity early on. So now you guys might be wondering, was today a short squeeze? I don't believe it was, because it's actually resulting into a gamma squeeze. A gamma squeeze occurs when an investor is trying to buy as many options to drive up the prices of select stocks. So in this case, investors are actually ready to buy $60 option calls on GameStop. So market makers who are actually making these option contracts, they either have to find someone who's willing to make those trades or themselves hedge a position to buy these shares at the price that is available right now. And this again is driving the stock price up. So now with the brokerage trying to fulfill these contracts, they're forcing short sellers to sell these positions or liquidate their assets to satisfy brokerage requirements. And this is causing the short sellers to unwind these positions. And that's why you may have seen a small dip that occurred today. So how high can the stock go? Well, no one really knows. The sky is truly the limit. This actually happened in 2008, where hedge funds lost approximately $30 billion by shorting Volkswagen stocks. The share price was $200 in September, and it ended up going to $1,000 in October. As we get closer to Friday, these short sellers are going to feel intense pressure to sell these shares at a high price.
In this case, by buying GameStop at any price and bidding the stock up, and up to crush the short so they have to cover, get it taken up. It's incredible to watch.
So here's my 2 cents on this stock. Yes, I do agree. It's a bit of a risky stock, and I would not invest all my money or a large portion of my assets into the stock. However, I also see this as a great learning opportunity. So my advice to you is, if you're willing to take the risk, try and invest a couple $1,000s or maybe even a couple $100s, because this opportunity truly comes once in a blue moon. With that being said, thank you so much for watching today's video. If you found this video to be helpful, make sure to give it a like and also hit the subscribe button to be notified of my latest content. And last but not the least, I'd love for you to share your insights on where you think the stock is headed, as well as your opinion on short squeezing the stock. Thank you once again, and I'll see you in the next one.